So, there are many of you guys struggling this year since once again it appears as though Wall Street has changed the rules on all of us. I mean, last year, many of you destroyed the market by 60%, 80%, some of you even over 100% last year. But this year has been less than stellar, so maybe you need to make a few changes. So I'll give you the 5 changes you need to consider making to your portfolio right now so you can get the most out of your portfolio. Just make sure you like the video if you like getting the truth without the hype. All right, so let's get into those 5 changes here and make sure you stick around for the last one there, because even if you don't agree with the other 4, the 5th one is absolutely critical to your success here. So it's definitely, hey, you want to blast me for the rest of them, go for it there, but make sure you get to that last one there so that way you get that information. So the first change is to clean up your portfolio. Seems to me like we're still having that thing pop up occasionally where people are chasing the latest hype stock, or there's a lot of momentum behind a stock and people are holding on to them or holding on to them too long. In that particular case, they have a lot of junk that they don't necessarily understand. And we still have folks, and I'm seeing it still, that have holdovers come from kind of that 2021 hype cycle to where these companies really aren't going anywhere. They're never going to go anywhere, but folks are still holding on to them in the hopes that, some sort of ultimate squeeze happens or something else of that nature. And that's what I mean by clean up that portfolio. It's okay to clean up mistakes. Now, obviously, some companies are just beat down because of where we are in the market cycle. There's a lot of other reasons for it, but there's a lot of junk in a lot of people's portfolios. And sometimes it's hard. You got to kind of acknowledge that, hey, I have a lot of stocks that I don't understand. I don't want to own. These companies aren't going anywhere. There's nothing fundamental there with the company itself. And maybe you just made a mistake. It happens to all of us. And that's what I mean by clean up that portfolio. I mean, we've had group members in the past who've joined and they had more than 100 stocks in their portfolio. I mean, that is a lot of cleanup to do in a portfolio. But hey, it happens. You get caught up with this stock and this stock being part of this, hype run, and then you get caught up in another stock, or you kind of go down the rabbit hole in another stock, and before you know it, over the course of a year or two, some of you guys have accumulated a lot of different positions, and it's impossible to do due diligence and track. It's hard enough to do 10 companies, much less 20, 30, 40 companies in some cases in some people's portfolios there or more. So it is a great time to go ahead and clean up that portfolio there, get down to your core holdings, stocks that you understand, stocks that you want to own for the long term, and more importantly, the number of stocks you can do the proper amount of due diligence on and the proper amount of tracking and everything else involved in owning a stock moving forward. Number 2, change the level of risk in your portfolio. You have to make sure you have the appropriate amount of risk in your portfolio. And I am still routinely seeing in my group, when people post their portfolios here in the comment section and a lot of different places, portfolios that are absolutely not adjusted for risk properly at all. And what I mean by that is somebody will have 10 stocks and 8 of them will be speculative. And they tell me their safe plays are like a Palantir and a Tesla. That's not exactly a well-balanced portfolio. That is a high-risk portfolio with, I agree, I like Tesla, I like Palantir, but those aren't really quote-unquote safe stocks per se. Those are still high-growth, high-volatility type stocks. I think they're great stocks long-term, but that's not a safe stock. And when you own 8 speculatives and those 2, and you feel like, oh, my portfolio isn't that risky, you're setting yourself up for another 2022 type disaster in your portfolio. And I don't know a lot of folks. There were some, obviously, a lot of you guys out there, hopefully, if you were following this channel, that were pouring more money into the market than they ever had before in 2022. Unfortunately, most people were selling out at the lows instead, or just fearful the entire time. So they didn't buy anything. They didn't double down during that time. And that's what that sort of portfolio will do for you, even during good markets, because it's so speculative. But you got to make sure you have the appropriate amount of risk for you in your portfolio. There's some folks out there where, hey, their portfolio could go down 40%, and they're excited because they're going to be buying the bit. They're going to be pouring money in. There's some of you guys out there that, hey, a 40% loss really hurts and really makes you question your investments and other things like that. So you need to take some of the risk out of your portfolio at that stage. That's okay. There's not a right or wrong answer to this. It's just a question of what's your risk tolerance at that stage. Some people are just fine being down 40%. Other folks, it's devastating for them to be down 40%. And also comes with age, right? I mean, if you're 25, hey, I don't know, you got to be okay with being down in order to make, a lot of money long run. But if you're 55 or 65, like some of you guys are out there, even older, trying to, you need this money for retirement, you can't afford to take a 40 or 50% dip in that money there. So you need to adjust your risk that you have in your portfolio to appropriately be what's right for you, for your situation, where you're at in life, and more importantly, your risk tolerance, how you feel, and of course, being able to sleep in the end. That's almost like the ultimate test is, can you sleep with your portfolio like it is? If you couldn't look for 3 months at your portfolio, how would you feel about your stocks? Would you be nervous, or would you be, okay, cool, I won't look for 3 months? That's kind of right there. Kind of tells you, do you have too risky of a portfolio for yourself or not? It's just another unofficial way to kind of indicate whether or not you have the right risk or not in your portfolio. But make sure you make those risk adjustments for you. My risk tolerance is different than yours. My situation is different than yours. And so is everybody else's. So you have to do the assessment for yourself. Number 3, change your outlook on money. So many people view investing as a one-shot deal. I'm basically going to put in my 10,000 and it's going to grow into $2 million later on. And that is not how actual wealth is built. Actual wealth is built by consistently putting in a bucket of money every single month, every single week, whatever you're able to do there consistently over the course of 5 years, 10 years, 20 years. And that's how you actually build wealth over the long run. The other way is kind of the lottery style, and it just doesn't work. Sure, you might get lucky. You might hit that one stock there, but that's not how you guarantee yourself to be wealthy. I don't know a single stock investor that just put in money one time in the market, never touched it again, and magically became millionaires. I know that they exist, but they are few and far between. If you want to guarantee yourself being a millionaire in the future, it starts with as young as you can, putting in as much money as you can into the market, and then watching that money grow over time as you continue to put money in as you move forward there. Too many people think that, hey, my $10,000 is going to solve my money problem into the future. And it doesn't. The stock market does not solve money problems. If you have money problems right now because you spend too much, because you're not disciplined with your budget, because you're not willing to cut things out of your budget in order to invest more or anything else like that, the stock market is not a vehicle to solve that money problem. If you haven't been saving for retirement, it's a great place to start for that. But if you're not able to put in the appropriate amount of funds into your retirement account consistently over time, whether that's just a 5-year, 10-year horizon, whatever the heck you need in order to retire, you're not going to get there. Banking on 10xing your money every couple years, that is a strategy that ends in disaster every single time, because you end up taking on incredibly dumb risk instead of good risk, and you just end up losing over the long run. Or you get into playing trading games where the professional traders can't even beat dead people or index funds. So folks with Harvard MBAs and teams of people working on stuff, teams of supercomputers and super brains and everybody else working on all these different trading models and all this different stuff like that, they can't beat dead people. They can't beat an index fund. But yet all of a sudden your strategy is you're going to trade your way there instead. It's just not realistic. Doesn't work over the long run. Sure, you may be up in the short term, but over the course of a 5-year period or a 10-year period, you're going to lose out. The stats don't lie in regards to that. Solve the money problem, get more disciplined with your money, invest more, and understand how money works and how the market actually works. All right, so 2 more to go, and the last one is the biggest one that you got to have, but this one is almost as important, not all the way as important, but almost as important. So let's jump into number 4. And that would be change the mix of stocks to meet your goals. All right, I think this is kind of best to illustrate with a couple of examples here. I routinely see members come in and they'll be a young person and they're wanting to be a multimillionaire. They're starting out their journey. They got a $25,000 portfolio, $30,000 portfolio, maybe a $10,000 portfolio, but they're wanting to, have $1 million portfolio one day. And, you look at their mix of stocks and they own stocks like Walmart and Ford and Coca-Cola. And that right there is a misalignment of goals. You're not going to get there owning those type stocks. And I also see the reverse. I'll see somebody come into my group. They're retired. They're looking to live off this income. They basically need income from their stocks for the rest of their lives, but yet they have it all in high growth plays and they don't own any dividends. They don't own any REITs or anything else like that that spins off income, when they tell me specifically they need income from their stocks. That's a complete misalignment of goals there. But more importantly, it goes to the fact that most people are not setting stock goals in the first place. They're just trying to have a well-balanced portfolio or something of that nature, some sort of a, just general saying that's out there. And generally speaking, those are terrible, because just own an index fund at that stage and call it a day. When you're investing in individual stocks, you need to pick stocks that meet your goals. It does me no good to own an S&P fund if I need income spinning off to me every single month in order to live on. I need to own dividend stocks. I need to be looking at REITs. I need to be looking at physical real estate. That's where your investment focus needs to be. That's where that goal setting is so important, because then you need to buy stocks that align with that goal. It makes no sense to be speculating on penny stocks if your goal is income. It makes no sense. And vice versa. It makes no sense if you want to, grow your money quickly and young and be a millionaire as fast as possible. It makes no sense to own a stock like Coca-Cola. I think it's a great stock, but I own it for the dividend. I don't own it because I think it's going to make me a multimillionaire in the future. It's going to turn a small amount of money into a large amount of money. It's not that type of stock. It's not the intent of that type of stock. It's not a reason to own that stock. You have to align your goals, what you want to do, what your future is, with your stock picks there. But you cannot do that if you do not set specific stock goals in the first place. And get rich is not a stock goal. I'm sorry, it's not. It needs to be something real, tangible, with real dollar amounts and real goals set X month, and how you're going to get there and how much money you're going to put towards it and all those sort of things. Write great goals. The better goals you write, the more apt you are to actually reach said goals. The worse your goals are, like get rich, you're never going to get there. Matter of fact, you're probably going to fall for more scams and more trash than anything else because you have no actual guidance there. You haven't actually thought through the process. You haven't actually put in the work to identify what stocks actually help me reach those goals. You're just trying to get rich, which of course leaves you open to, of course, the get rich quick scams and stuff like that. Don't do that. Set intentional, tangible goals with actual numbers to actually get you there, and then set up a plan in order to get yourself there. But make sure those stocks align with those goals. Otherwise, a good goal or even a great goal, but then you choose the wrong type of stocks, is going to have you not hitting your goals in the end. And on to the biggest change that you need to make. We've talked about it recently, but I still see it. I still see this mistake made all the time, and we need to change it right now. So the last one would be stop looking at your portfolio. It was so easy to buy the dip in 2022 when the market basically cratered because I never looked at how much I was down. So even though I kind of subconsciously knew it was probably seven figures or so, I also knew it doesn't freaking matter. I need to buy them because I never actually had actual confirmation of that. It made it so easy to just buy and buy and buy again. If I would have looked, human nature kicks in, you can't help it, and you start being a little bit defensive. And that wasn't the time to be defensive at all. That was the time to go on all in offense, right? That was the time to put out the spread offense and go for it. Go big. That's exactly what that is. And that's exactly what every single market crash is an opportunity to go big. But the moment you understand how much you're down, especially as your portfolio grows and it gets larger, those amounts down get significantly larger, and it becomes hard because you're putting in money and it's just going to go down more. And that's just kind of the facts with how investing works. Now, I understand everybody says they can time the bomb and that this chart says this and that chart says that or whatever. It's all fool's gold in the end. The facts are I put in more money than I've ever put in the stock market in my entire life in 2022, and it paid off huge, massively in 2023, making whatever the heck I was down in 2022 completely moot. Doesn't matter because I'm up way more on the back end of that than I would have been if I would have done nothing and just waited the entire thing out there. And that right there, it would have caused me to play some defense if I would have looked. So I don't look. Same thing whenever it runs up big. Don't look, because guess what you start doing? You start dreaming. It's human nature. You start going, wow. Think about people that were up 80% last year, 60%, 100%. You start going, well, if I could do this every year, the number will be here. That's not realistic. And that's exactly what your mind starts doing. And then you start thinking about what you could buy, how it would change your life, how it would change your lifestyle. It's just human nature. I don't need any of that going into my investing calculus when I'm looking at investments. I need to continue to make good investments. I also don't want to play the comparison game and go, hey, I was up 80% last year, but this year, I'm only up 15%. Man, I must be behind. I'm really sucking. Man, I'm not even sure I'm going to beat the S&P this year. Well, you crushed it the year before. It's going to average out to still have you beating the S&P over a 5-year time frame. And oh, by the way, if you're putting money into down plays this year, that means you're going to be up on those eventually at some point in time in the future. They're going to run as well. Maybe not to the 80% tune, but nonetheless, you still know you're investing for that future. And when you kind of look at the now, you look at what's going on, you get caught up in all the short-term news. Oh, why did Tesla go down today? Well, who freaking cares? Doesn't mean anything to me unless there was earnings or something like that. Outside of that, I don't freaking care. Why is it up today? I don't freaking care. It's irrelevant. I'm following my plan, following my price targets, and executing to those. That's it. When you look at your account, it does nothing except for create emotions, which we all know destroys your investing, or it causes you to question your plan or change your plan. And most of the time, especially with daily movement, stock price movement, there's no reason for it beyond traders playing trading games and the latest news or whatever. There's nothing fundamental there. So there's no point in it. So you're introducing something into your planning, into your thinking that is not relevant to your investing, and it can do nothing but sideline you in the end and cause you to make mistakes. So don't look, and then you're not nearly as tempted to make decisions outside of your plan. It makes it much easier to stick with your plan. As a guy that's been doing this for 25 years, I can assure you that is the biggest piece that made it so easy to not buy the hype in 2021 and then basically pour as much money as I could into it into 2022. That was the biggest piece because I never looked in the first place what I was up and then what I was down. And then in the end, it ended up working out incredibly on the back end there. And if you don't know how to make a plan, do evaluation, set goals, create price targets, just simple due diligence on a stock, make sure you check out the pinned comment for my group where we have information on all of that. You get 5 courses for free. You get the free coaching that's there. You get to use the stock analyzer tool for free. You can talk to me anytime you want, slide into my DMs, jump on our live Q&As. You see my watch list complete with price targets, see all my buy and sell alerts. Guys, there's so much involved in the group. Oh, by the way, the best 6, 7, and 8-figure Discord out there with some incredible folks in there helping you out as well. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.